All right, thank you all for joining our monthly recap of performance, a little bit of outlook of what's happened in the markets. So Michael, September was the first down month in a while. You want to recap sort of the thoughts and returns we've seen in the month of September?
Sure. So the S&P 500 and the NASDAQ, those were down about 4.5%, 5%. And you actually saw some relative value within the small company names as well as your value and or dividend-focused names. And that's the reason for that is they tend to have lower valuations than their growth and tech counterparts, but also the value names have a higher payout ratio. So those types of things put more of a floor under the stock price relative to some of the growth names. And you also saw bonds, still down a little bit, but definitely not as bad as equities. Bonds were down about 0.5% to 1% on the rising interest rates that we've seen.
So Michael, markets don't go up every month, right? We were all.
I wish it was that easy, JR.
Since March last year, it's been pretty much every month. Stock prices have been up, and it's really the first kind of negative month in a while. I mean, so as we look out, should we be a little bit concerned near term, or how are we looking?
I think you're going to see a bit more volatility in the near term, just with what's going on in Congress. There's some issues trying to get the infrastructure bill passed. You're also seeing both sides trying to get through some budget plans. But overall, I think that with some of the inflation concerns we're seeing as well, that you will have a bit of volatility over the next, call it, month or two. But long term, I still think there is a lot of upside to this market.
Yeah, and you look now, we're kind of the end of the third quarter, so we'll be getting third quarter earnings in the weeks ahead. And to your point on inflation, I mean, one of the big things we're watching for is which companies are going to be able to maintain margin. Right, because what you've seen in a few companies that report in the second half of September is there's been a lot of concern with trying to meet demand from consumers. So a lot of companies haven't been able to hire enough. So there's been a continued labor shortage. So a lot of overtime, a lot of extra shipping costs. The supply chain continues to hurt things. So we're really going to be looking for is which companies can maintain those margins, and the ones that will continue to be attractive. The ones that aren't, there's probably going to be some pain ahead in this quarter's earnings results.
Right, and I think companies to look for are going to be ones that have really been able to pivot more towards online sales, where you don't need the brick and mortar store, you don't need the employees in to help with sales or just general operations, where you have your customers just going online, click and buy, and that's that. Well, those are, I think, companies that will, as you said, not have as much pain moving forward, but could also represent good opportunity.
And one of the topics that's come up this month, which we haven't seen too much of in a long time, is stagflation, right? And you look at what stagflation is, just for a quick recap, it's a period of high inflation and slower growth, right? And the last time in the US that we really saw that was in the 70s. And it's something to watch for with the earnings results and the economy overall. Chairman Powell was testifying in Congress talking about inflation, which we talked about as transitory for many months, and now he's seeing that it's lasting a lot longer. And the tools that the Fed has to deal with stagflation is not very. There aren't very many options, I guess, is the point. So it's really something when you look at that. And Michael, what is are we worried about that, or is it something that probably isn't a high risk at this point?
I think right now it's not a super big concern, just because when we look at, I think, the overall health of the consumer, people are still flush with cash. There's still a lot of money on the sidelines. And, we've seen interest rates come up, but even if the 10-year at 1.5%, that's not really exciting. It's not really moving the needle, so to speak. So from that standpoint, interest rates are still at historically low levels. And it just makes something like stagflation not as big of a concern.
Well, you brought up interest rates. Interest rates have been kind of the hot topic the last week or so in the market. And the reaction, which is highlighted in some of the rotation in the September markets, but it's actually some of the most rational trading we've seen in the markets in a while. What we mean by that is investors are concerned about inflation. Interest rates have been very low, but what's happened in the last week or so is because of that, interest rates have jumped. And then we've seen a rotation within the markets because in theory, with higher inflation, interest rates should be up so you get compensated for that inflation. And then valuations, especially the high growth valuations, tend to come down. because you're getting compensated more interest to take less risk. So we'll see if that trend continues, but really it's been very kind of rational investing for the last week or so. Even though nobody likes to see the market down, it is healthy to see some of that rotation and rational kind of investing that we've seen in the last week or so.
Right, and with that rotation more towards fixed income assets and out of the growth and tech names, it can't just be one for one. Where do you think some of the other opportunities are as interest rates rise and people look to reallocate their investments?
Well, you look at where things are and what we're looking for ahead. It's going to be a tricky earnings season overall, as we said a little bit earlier. But the things to look for are consumers, as we said earlier, are in great shape. I mean, consumers have never been in a better place. You see companies with record amounts of cash as well. So it's going to be interesting to see what companies do with that cash, right? For the most part, there's 3 or 4 things companies can do. They can pay a dividend, they can increase their dividend, there's share buybacks, mergers and acquisitions, right? So we're going to see, and then capital expenditures. So the companies that are really looking to put the money to work, because if you're a board of directors right now guiding a company, it's hard to sit on record amounts of cash with the inflation. And right now, at this point, you're 5% or so behind letting that money sit. So that the companies that are really proactive, and again, with the mergers and acquisitions, it should be a strong fourth quarter and into next year. And usually what benefits of this cycle are that top end of the mid cap, the bottom part, and the smaller companies. And big companies are going to put that cash to work in this cycle, looking for that next wave of growth. So we'll be looking for those areas of the market, as well as just generally commodities and companies that benefit with the inflation. I mean, those continue to be areas to look at. And then as we think about kind of the near-term volatility and when it subsides, Congress will figure it out. It could be longer than any of us like, and it could cause more volatility. But the reality is that will resolve itself in the weeks ahead. And then we'll get into the fourth quarter and then next year.
So in summary, it sort of sounds like what you're saying is that we're still in this period of sort of the risk-on trade is what we're seeing, and what, despite some upcoming volatility that we're expecting, is still the way to go.
And when you think about that bottom line, there's still too much cash out there. And with inflation, investors, if we do get a continued correction, which again is healthy in the long run, the money from the sidelines, the cash in companies will come in, we believe, to kind of make new highs in the market in the weeks and months ahead. So with that, I want to thank everyone for listening, and we'll touch base next month.
All right. Thank you, everybody.